Ahead of the BRICS summit, all eyes are on whether these countries will decide on a common currency for the region. Early reports suggest that India is not too keen on this and wants to push the rupee entirely. In the last few months, this has been a hot topic of conversation. Can the rupee be the new dollar? Can we have an international dimension to the currency? Now, to speak on this and a lot more, because it's an exciting time to understand where India's economy is headed, I'm joined now by Arvind Panagariya. He is a professor of economics at Columbia University and one of the foremost Indian economists in the world. Mr. Panagariya, thank you so much for speaking with us on the Times Network. Great to have you on the show. Let me begin by talking to you about a very interesting piece you wrote in the Times of India recently, where you talked about the challenges that we face when dreaming of the rupee as an international currency. Why do you think so?
Okay, number of reasons, Tamanna. But first of all, thank you for having me on your show. I have no doubt that in due course, rupee will be internationalized and it will become an international currency. But it is just a little bit early right now, for the simple reason that the currency, any currency, has 2 or 3 different functions. It serves as the medium of exchange. It serves as the measuring rod. Like prices are always denominated in some currency, and then it is also the store of value. That whenever we have excess wealth, we want to hold that wealth into something, in some currency. So these are the functions which the currency has to serve. And usually, of course, in any transactions that we do domestically, then rupee is the obvious currency to serve all 3 of those functions. We all keep our money, in the bank accounts. So store of value is in terms of the rupees. And we transact in using rupees. Internationally, when individuals or those parties transacting are in 2 different countries, then the same functions have to be served by some currency. Currently, if you look at it, the dollar kind of accounts for almost 80% of the transactions, international transactions. So whenever the 2 entities are located in 2 different countries, it is the dollar in which the prices are generally denominated, and it is the dollar in which the transaction takes place. Likewise, central banks hold their reserves in certain currency, and again, about 60% of the reserves by the central banks are held in the dollar. That proportion has declined over the last 20 years from maybe something like 70% to 60%. So it is on that trajectory. But nevertheless, it's still dollar is the dominant currency. Now, the hurdle for us in becoming the international currency is this. Our share in the international trade in goods is about 2.5%. And in services, it's about 4%. In financial transactions, it is even smaller. So with that kind of small share, for us to actually become an international currency, even if, for example, we were to denominate all our transactions in rupees, which also is not entirely in our hands because also the partner country has to be willing to do that. Even then, we can push it only to 2.5% in the trade transactions and 4% in services transactions. Financial transactions even less. So I think leverage at this point is relatively small. Also, I feel that for us, internationalization of rupee should be the long-term goal, not the short-term. We have too many other short-term goals. We need to grow rapidly. We need to become.
It's more of an emotive issue. That why trade in the dollar, when we're taking pride in a growing economy, etc. It's become a bit of an emotive issue as well, a symbolic issue, that why should the rupee not be on par in terms of an international currency as the dollar, despite the fact that the rupee has been weakening against the dollar very consistently.
Look, certainly there is an emotive aspect to it. There may be a substantive aspect to it as well. The substantive one being that, the Russian experience recently, that they were shut out of the SWIFT system, and generally, they lost access to their reserves that they were holding in the US dollar, a lot of the funds that they were holding in the US Treasury bills, etc. So the substantive aspect may come from that fear that, what if we also lose that kind of access? Then we got to have the alternatives. So to that extent, if we want to develop certain sort of, rupee trade channels, and that can be done without compromising on other objectives that are much bigger for us, then that part is okay. But emotively, I think, to subordinate our more pressing objectives to this objective of internationalizing the rupee is not a good policy. I think that is going in the wrong direction. For example, I'll give you an example that one way that we can further kind of promote internationalization of the rupee is by becoming capital account convertible. That, rupee becomes fully convertible, no questions asked, into other currencies. Now, that's something that we want to hold off. We want to go slow on that particular aspect of policy because we got other objectives. We want rupee to remain stable. We want inflation to be under control. You don't want to lose the policy levers, the control over the policy levers. And so I will not, subordinate, therefore, the internationalization of rupee in this sense to the other objectives.
Right.
Other objectives being, maintaining a stable rupee.
Speaking about another priority right now on the economic front, or definitely in people's lives, is runaway inflation. And I'm talking specifically about food inflation. Even as I'm speaking with you today, a big story is about how India has imposed a 40% export duty on onions, on the export of onions. Onion traders and producers are unhappy because this was their chance to earn. This onion situation follows a pain in tomatoes. There are possibly going to be shortages in rice. What do you make of this constant pain point we see every year? We say it's seasonal, but the fact is that food inflation rears its ugly head every year.
Look, Tamanna, on this issue, there is seasonality. In fact, particularly less so. I think, we are able to deal with issues on rice prices and wheat prices because, 80% of the population does receive 5 kilograms, about 75, let's say, that does receive some sort of subsidized food, and it's very highly subsidized, wheat and rice. So I think that is less of a challenge, I would say. But on perishables like tomatoes and onions, these price spikes can take place because, the production is seasonal, and we haven't developed very good storage facilities. I think that has been one of the weaknesses in our system, that warehousing, particularly where perishables could be stored for a considerable period of time, have not been created. And that is a long-standing kind of weakness in the system. The present government, in fact, has actually tried to now emphasize a bit more on the logistics side of it. So we need to develop that. But look, overall, I will not lose too much sleep over that. It is true that these things get the headlines. But overall inflation rate, we have been maintaining steadily, below 6%, which is within our target range. And occasional spikes, though they grab the news, I certainly personally don't lose so much sleep. We should, that is not to say that we shouldn't take any policy measures. I think, we do need to improve our logistics system so that both internally also, by the way, a lot of these shortages also are localized. And that's because, we don't have, again, logistic facilities to move products, tomatoes and onions from excess supply areas to excess demand areas. So that also needs to be evolved. But again, I will not react too sharply to that.
So the July CPI figure of 7.4% doesn't bother you? You think India is fine on the inflation front over the next few months?
Our present CPI is below 6%, right? 5.2, 5.1, somewhere there. I haven't checked the last number.
The July number was 7.4, sir.
It's a monthly look,
Yeah, the monthly.
So that's not good. No, that is certainly not good. So I missed that number. So if it is 7.4, that certainly is not good at all. And especially given the fact that we had already gone below 6%. So I take it that this is coming from the spike, and so that spike will have to be addressed. Yeah.
Okay. Inflation tends to be a very political issue traditionally in India. Do you think it will continue to be so? And I'm talking politics with you because of your recent statements and quotes about the outcome of the 2024 battle. That is something everyone is looking at, whether they follow politics or economics. I think everyone, not just in India, but around the world as well. Do you think that your prediction still stands, that we're going to have a third Modi term in 2024?
I mean, I think, this 1 month inflation figure is not going to change that. But I think, certainly inflation is something about which the government ought to worry, because persistent high inflation can actually impact the elections. That we have observed. Because you see, in some ways, the inflation and unemployment are a bit asymmetric in their effect, because inflation affects everybody. And so the voter behavior at large can be impacted by very high, sustained, persistent inflation. Unemployment, on the other hand, impacts, it is in some ways more hurting than inflation is. But it is usually, hurting only a small section of the population, and therefore it impacts less the election outcomes. So certainly the government has to be very vigilant. The RBI has to be very vigilant. Even if this is not an election, certainly anything that's beyond 6% is hurtful to the population at large, particularly if the incomes are not proportionately rising. So that's certainly something that ought to be paid attention to. But to the broader question you're asking me, would I change my mind on the election outcome? No, I think there is a 10-year record of the government, or will be 10 years. Right now it's 9 years, and it is a stellar record of the government. And ultimately, the people trust the Prime Minister. I think really, if you ask me, the bottom line, people have tremendous faith in the Prime Minister, that he's a man of his word, and he can be trusted going forward, that he works in the interest of the nation. He has no other interest. Now, mistakes can be made by anybody, but intention is very well understood of the Prime Minister, and I think that is a very important factor for the people in deciding who they vote for.
So you're very sure on your end right now about what the outcome of 2024 is?
At the moment I am, yes.
Okay. Another issue I wanted to talk to you about is, the Indian economy and where it's heading. You've been quoted recently as saying that we're headed soon to be the third largest economy. And this comes at an interesting time. Moody's recently reaffirmed India's Baa3 rating to stable. It kept the stable outlook. The Indian government has been pitching for an upgrade. That hasn't happened. But, the positive things to say on India's growth, they have, although, flagged off some concerns on things like curbing of political dissent, very populist policies. They've also talked about the violence in Manipur. What do you make of that, and how much merit do you put in what rating agencies say?
Yeah, look, rating agencies ought to look at the credibility of the nation to pay its debt. And on that score, India is 100% credible. So India's credit ratings, in fact, should be extremely high. But there are all these other things that get built up in their indices, which have nothing to do with the ability of the country to pay back its debt. So ratings agencies themselves actually require some reform. Just because India is a developing country doesn't mean that, you attach a big negative number just on that account. I mean, look at the history, post-independence history of India. Has it ever defaulted? In fact, quite the contrary, it has always actually bent backwards to pay its debt. I mean, 91 crisis, balance of payments crisis is the prime example of that. That at that time, we would not compromise our credibility in the international markets, and therefore we flew in the gold physically so that we could borrow and pay our debts on time. So, there is certainly a strong case for the reform of the ratings agencies themselves. How they arrive at it, are they transparent themselves on this score? I mean, are they assessing the United States on the same scale? I mean, is there the kind of I mean, they ought to assess the United States also on whether it is protecting the freedom of speech in various parts of its country as well.
Do you think, if looked at objectively, India's rating should be upgraded?
Yes, it should be significantly higher in my view, because ultimately, right, your the ratings are all about your solvency. Are you solvency and creditworthiness, and on both accounts, I think we are both solvent and very creditworthy. Those should be the basis. In some ways, we should be able to turn around and ask the ratings agencies that why do you think we are not creditworthy, or why do you think we are insolvent?
I want to turn the conversation to a bit of global economics and a very serious concern brewing right now in neighboring China in terms of the economy. This is being seen as a concern, well, obviously for China, but also for the world. How do you view the Chinese crisis right now?
No, I think there is a bit of serious decline. Now, there are two aspects to it. One is that no country, so far has sustained this kind of high rates of growth beyond at the most 4 decades, but generally, at the most 3.5, not even 4. And China has done that. And, China grew for more than 3 decades at 10% a year. And if you look at the history of Taiwan, South Korea, Singapore, after between 3 to 4 decades of very high growth, you join the human race, meaning, you join the rates of growth that the Europeans have or the United States has. And that did happen to all these countries. And likewise, I think, China is in the same category now. So the decline in the growth rate is very much consistent with those observations. And therefore, I think, a significant decline clearly will remain there. Now, there is also this other aspect, which is perhaps more short term, which is induced by the internal policies as well as the external relations of China, which have brought in all sorts of hostility in trade relations, particularly from the United States, but also to some degree Europe. That is a different phenomenon, and how is that going to impact, and whether this kind of hostility, both internal and external, will remains to be seen. But if it does remain, then that is an additional factor. So I do feel pessimistic actually about China growing terribly rapidly. I think they will continue to grow, about 3 to 4%, maybe even 5% at the most, but certainly not more than 5% going forward.
What does this mean for India? I mean, China slowing down is bad news for the world. Would that be the kind of spillover we would see in India, or are there some opportunities there as well?
For us, actually, if we take advantage of it, it is a huge, huge opportunity, and it is an unprecedented opportunity, because China today has a share of over 13 to 14% in merchandise exports. Certainly this slowdown is going to lead to China kind of, quitting space in a number of these projects that are of interest to us. So, for us, there is a huge opportunity to take advantage of it. But that ultimately is going to depend on us. How do we run our exchange rate? How do we run our trade policy? All these factors are going to play. Otherwise, the benefit will go partly to the other countries. And partly, of course, overall level of trade may also decline, as China vacates the space and nobody else comes to fill in. Then, of course, the production will move to the countries themselves. But for us, this is tremendous opportunity.
Yeah, it's an opportunity which we should be able to and hopefully will seize upon. I'll have to wrap it here, but thank you so much for speaking with us, Mr. Panagariya. Always a pleasure.
My pleasure. Thank you, Tamanna.